What?
Hello, Warriors. Dale Pinkert here at TradeGATEHub.com. When I left you on Monday, I said, look to sell a RIP, to sell a rally in cable at 20, right around 25.50. I was 25.46.5. It was a good call. You have about 130 pips, 120 pips on that. Should always be taking partials. The euro's been weaker, as shown by the EG, euro pound. Looking for one more low in euro pound, and then that's when I'll be more interested in possibly shorting the pound even more aggressively, because the pound could fall more. So when you look at the pound, if this is a top and it's looking more and more like it, you go to a daily, there's some big downside objectives in cable from its recent highs. Like 61.8, it's 112. It's another 1,000 pips, let alone 78.6. So lots of support, a lot of support down here, trying to hold it. But to me, it looks like the dollar wrecking ball is back in business. Talked about Friday being the bottom in the dollar to buy pullbacks. 102 is your pivot in the dollar. 103.50 is the next important level. We get through that, that's going to even confirm elitians that the dollar is good. I'm looking for over 105.5. And a big story of why this is happening is because of yields. So if you look at the 10-year yield right now, we're trying to break out over the 360 level on the 4-hour right here. Over 360, if you look at the big picture, it could mean 395 yields are coming, which is exactly the opposite of the way the market stands, looking for lower yields along with lower inflation. And it may not be because of inflation going up. What bonds and especially treasuries are going to have to contend with is not rates going up because of a strong economy or economic data. The manufacturing data, all the data this week showed that there's weakness. Rates can go up without economic strength due to supply overwhelming demand. And the narrative is, once the debt ceiling is passed, the Treasury's coffers are empty, and they're going to have to issue hundreds of billions in bonds and notes. Could cause a crowding out and a higher long-term yield as well. So when I look at the 10-year, that's one thing, but you have TLT on the verge of breaking down. Okay, so there it is. I think we're called about 60 lower. So here's more of the look. If we're breaking down here and pre is about 50 lower, looks like it could be, and you look at the lows in the bonds, that yields are going to go up on the long end as well. And that is not going to help an already constrained banking sector, as their books and their capital, if they mark to market, will drop even further, which will constrain them from offering credit. The dollar wrecking ball as well has taken its impact on gold. I talked about 2000 being taken out, that there's problems. I'm looking for 1920. To me, it looked like a magnet. Silver, I talked about 24.5 being taken out. And when we were up here, I said, be patient. You're going to have a chance to buy metals and miners cheaper. That still looks in gear, as long as we still have this move in yields continuing. You look at things like copper, definitely still looking very weak to me. Looks like 350's coming. So the metals are taking it on the chin from the dollar. The only markets that have not responded to a strong dollar yet are S&Ps. They're trying to break out to the upside. And here's your NASDAQ, where we have a rising wedge with a throw over. If the NASDAQ 100 gets back under, call it 13.4, and we're back inside the formation. That's your sell signal. What else I wanted to touch on? I lost my way in the yen because, if you go back in my videos back here, I was talking about we were going to trade in the 140s. And then we had this action and it kind of threw off my narrative and I never recommitted, even though it started to advance again. But you could look at 138 and, 138 and all the way down here, 27, and we could end up in the 140s on this yen trade with yields going up, higher yen, higher dollar, lower gold, lower bonds. So there really isn't too much I want to be long. I think even Bitcoin is still not performing, has lower levels to explore in the coming days. Here's your look at Bitcoin on a daily. It's trying to hold the support level here at 26. We take that out, we're going to be looking at the low 20s. So it pretty much, besides mega cap tech, there's not much that you want to be long. You're either short or out and waiting for buying opportunities. And even mega cap tech, as you know, I'm bearish Apple, and I was the wrong way into earnings. Here's Apple right here. This was the earnings report. Thought we were topping here. We have a throwover back under 170. We're back in the formation, and that's your signal now. It's really not that far away, under 170. So even with the big rally we've had in NASDAQ all week, Apple's gone nowhere in a week. The earnings were last Thursday. So what are you waiting for, Apple? Watch at 170 level closely and trade, go with the dollar. I think it's going to be one of the hatest dollar rallies we've had. I talked about how we had all those different articles about de-dollarization that happened right near the lows, and where people that are not usually involved in the markets were worried about the dollar and asking me, Dale, what should I do about the dollar? What do you think about the dollar? And here we are embarking on another rally. So again, trade what you see, not what you hear. And above all, don't just count your pips, count your blessings, and have a great trading day, and get ready for gravity to take hold as it is already in many markets. There's an expression that if you get the dollar right, you get everything right, because it's all one market. So as long as we have this recovery happening in the dollar, and anyone I ask, I go, well, what about the possibility of getting back to 108, 110? I have no agreement. Most people are saying, well, maybe it's just a flat and we'll get back to these levels, and it's just a weak bear market bounce. Time will tell. I think there's more to it. And I think a lot of it has to do with the market is mispricing rates, and the market's going to show them that higher yields are coming, not only because of sticky inflation, but because of overwhelming supply. I'll see you in the room, TradeGATEHub.com.